Welcome all to our review of the first quarter of 2021. I read recently that the manufacturers of Crocs, those very comfortable shoes that most fashion fundies would not be caught dead in, has delivered an all-time record profit for the first quarter of this year. I believe that the reason for this is that most formerly office-bound employees are still working from home and are enjoying the freedom to dress for comfort above all else, at least for the bits outside the frame of the video conference camera. Have I acquired my own pair or two of Crocs yet? No comment. What I am willing to comment on is that the strong performance of global markets since the initial COVID-19 panic subsided has continued during the first quarter of 2021. The US economy grew by more than 6% in the first quarter, and second quarter GDP growth is expected to be even stronger. While COVID is going to be with us for a long time, the infection rate in most of the developed world is reduced or at least stabilized, and vaccinations are progressing well. However, in some other countries, the virus has recently become a huge problem, with healthcare systems struggling to cope and concerns about new virus strains emerging and spreading across the globe increasing. This means that the world has not magically become a largely risk-free place, and that investors still need to be cautious and level-headed. South African markets have followed the strong trend, with our equity market growing by approximately 13% over the quarter and by an astounding 55% for the 12 months to 31st of March. Momentum investments portfolios across the various ranges and risk profiles have also produced strong performances against their respective market benchmarks and against their peers, against inflation, and especially in absolute terms. Our overweight position to growth assets, specifically local and offshore equity, has paid dividends over the quarter and the year. Even listed property shares, which suffered badly in the initial COVID turmoil, have continued their recovery. While headwinds for this sector are still very much present, these shares are expected to produce solid, if unspectacular, returns in the next few years. Our diversified mix of equity managers have performed largely according to expectation, as dictated by their varying investment philosophies and methodologies. And the aggregate equity portfolios produce satisfactory performance against market indices in this rampant bull market. We believe that the accommodative stance of central banks is set to continue for the foreseeable future, and that global economic growth is likely to remain strong as major economies move to less restricted states. Consumer spending on travel, holidays, and other sociable activities will pick up as a result of this, paving the way for good growth in corporate profits in these sectors. In South Africa, most portfolio managers also expect the good performance of equity to continue for some time. Many managers are finding excellent value and prospects in the recently out-of-favor South Africa Inc. shares and are loading up their portfolios with these bargains. We will continue to favor growth asset classes in our portfolios for the foreseeable future. In closing, I want to confirm that we remain firm believers in the built-in ability of the portfolios constructed according to our outcomes-based investing philosophy to weather market storms and to produce predictable long-term results. It bears repeating that we also strongly believe that the basic principle of remaining invested and calm through market turmoil is the optimal long-term strategy. Thank you again for your support. I'm looking forward to the next update.